Good morning. I am Jordan Dove. Today is November 16th, 2021. I hope you're doing well. Some topics that need to be discussed today. But first, like and subscribe to the channel. Please hit the little bell notification so you get a pop-up when I post a video. I would appreciate it. Thank you so much. What we're going to talk about today is the federal government is about to back mortgages of up to $1 million because of appreciation, which tells me, in my opinion, that housing prices are going to continue to appreciate through 2022. A lot of people are expecting some crash. Me personally, my opinion, I'm not seeing it in 2022. Okay, so 10-year treasury, as you know, mostly tied to 30-year fixed mortgage rates. Slight downtick today, but up on the year. It's at 1.606%. 30-year fixed mortgage national average of locked rates today. We have no movement. It is sitting at 3.23%, up quite a bit from last week. Okay, so here's the updates today. Important stuff. Wall Street is destroying the middle class. It is not good. What they're doing is not good. And we're going to talk about that in just a second, okay? But this just in, the Wall Street Journal is reporting that the federal government is about to back mortgages of nearly $1 million for the first time in history. The maximum size of home mortgage loans eligible backed by Fannie Mae and Freddie Mac are expected to jump sharply in 2022, which is a reflection of the rapid appreciation in home prices nationally over the past year. By law, the loan limits are updated annually using a magic government formula that factors in average housing price increases nationwide. Currently, the government-controlled mortgage companies can back single-family mortgages that have balances as high as $548,250 in most parts of the country and up to $822,000 in expensive housing markets like California and New York. Those limits are expected to jump to a baseline of about $650,000 in most jurisdictions and just under $1 million in high costs markets. Okay, 100 counties out of the more than 3,000 counties across the United States are designated as high cost markets. What this tells me, guys, in my opinion, is that property values are going to continue to appreciate in 2022. I don't believe the federal government would be backing higher mortgage securities if they didn't believe homes were going to continue to appreciate. Investors bought a record of 18% of the U.S. homes that sold in the third quarter. Investors purchased a record of $64 billion worth of homes as growing housing and rental prices boosted prospects for returns. Single-family homes made up nearly 3/4 of investors' purchases. That is an all-time high. Go watch my video on how real estate is a hedge against inflation. The money in the market, the sharp money, the big money, the Wall Street money, they are purchasing residential real estate, cash flow, investment properties as a hedge against inflation that we are going through right now. Go watch the video. I explain it. That's what's happening. If you don't own real estate, you're going to lose. That's all there is to it, my opinion, but that's what's going to happen. Okay, so the low-priced properties represented 36% of investor purchases, which is the smallest share on record. The third quarter of 2021 marked the fifth quarter in a row of 3% plus growth, an average of 4.65% a quarter. Those 5 quarters also saw the highest level of overall real estate appreciation in history at 23% because Wall Street and corporate America are driving those prices up. Wall Street and hedge funds are purchasing swaths of residential real estate, BlackRock has purchased entire new neighborhoods from residential developers and turning them into cash flow rentals. Blackstone played it off with their PR. This was out there several months ago. They bought a development in Texas. I believe it was D.R. Horton, if I'm not mistaken, of over 100 homes, paid over value cash. Developers sold to BlackRock. BlackRock then turned all of those homes into rentals, pricing out the middle class who had an opportunity to purchase a home, to build wealth for their family, to build generational wealth, to leave their family something when they're gone. This really pisses me off, guys. So what Blackstone did is they took their PR, and go do your Google searches. They played it off with their PR. They said, oh, it wasn't us who's buying up the neighborhoods. It's not us. It's Invitation Homes, which is a $21 billion publicly traded company, which is spun off from Blackstone. Blackstone is the majority shareholder of Invitation Homes. But Blackstone says, that's not us. We're not buying those neighborhoods. We would never do that to the middle class. We would never screw people over out of their money. We're not going to transfer wealth to us and away from you. No, we would never do that. That's another company doing that they own. Okay? So, shadow corporations, shell corporations, that is their game. Okay? Invitation Homes portfolio of homes is worth a total of $16 billion, and the company collects about $1.9 billion in rent per year. That means it only takes about 8 years of rental payments to pay back a typical house that Invitation Homes has purchased. Think about that cash flow. Now they can leverage that money to buy more homes and bigger portfolios of residential real estate and commercial real estate and whatever the hell else they want to do because they have more money than me and you combined. Okay? That's what they're doing. Corporate investors are buying up the stock, and this is where it gets interesting. They know exactly what they're doing. They're buying up the stock of relatively inexpensive single-family homes built since the 1970s in growing metro areas. Hear that? In growing metro areas. They mostly ignore bigger and expensive homes, especially ones that are move-in ready, because the wealthy boomers and the nation's finance and tech bros, they're nabbing up those properties themselves. Corporate investors like Blackstone are also ignoring cities with stable or shrinking populations like Providence, Rhode Island, and Pittsburgh. So they're ignoring those, but they're purchasing up-and-coming communities. Interesting. I believe what is happening is that they are trying to turn the middle class into renters and price them out of the market, especially first-time home buyers, younger adults. You're really getting screwed right now by big league politics. Okay, that's what's happening. These hedge funds and these politicians are in bed together, and they are working together to screw the middle class. Okay? This means they're making it more difficult for everyday Americans to build foundational and generational wealth through real estate. In my opinion, this is extremely dangerous and unprecedented. Be on the lookout for this. Okay? A major problem is that investors are depleting the inventory of the precise homes that might otherwise be obtainable for younger working and middle-class households in the cities where workers can easily find good-paying jobs like Atlanta, Charlotte, Phoenix. Okay, that's what they're doing. The corporate money is able to buy these homes in cash versus the middle-class buyer, which is typically financed and takes more time to close. So sellers are taking the cash because they can close in a couple weeks, and these Wall Street hedge funds have virtually unlimited cash. BlackRock owns over $7 trillion in assets. So Invitation Homes, aka BlackRock, told its investors, and I quote, this is a real quote, "We operate in markets with strong demand drivers, high barriers to entry, and high rent growth potential." That means they're going to own the asset. You're going to pay them to use that asset. They get the cash. They get the wealth. They leverage their cash to make more money, and you lose money every single month. That's what they're doing. What are your thoughts? Leave it in the comments. How can you battle this? Go watch my video. Is real estate a hedge against inflation? It is. In my opinion, it is. And all the money is moving to that, as you can see. Okay? Like and share. Subscribe. Love you guys. Over 250 of you have requested my books and received it. I've sent out hard copies. I'm actually almost out. I'm going to order more. Also working on a new book. I think you guys will love it. Have a great day. Tomorrow, I'm going to talk about when you're hiring a real estate professional, a realtor specifically, what you need to look for, what kind of questions you should ask, and how to make a good decision, because there's a lot of bad agents out there. There just is. There's a lot of bad ones. There's a lot of good ones too. You want to work with the good ones. I'm going to show you how to do that tomorrow. Okay? Everyone, take care. Be well. Be safe. I'm out.